QuickStart. 10 Tactics to Profit Acceleration. Cut costs. Cutting costs is the one guaranteed way of keeping more money in your bank account. Smart business owners will start with cost cutting when they need more revenue, and they will do everything in their power to cut costs at every available opportunity. To understand why this is so important, you must understand the difference between gross profit and net profit. Many businesses use their net profit figure to determine the profit impact of any revenue that we might help find them. That's a huge mistake. Net profit is determined after all costs are taken out. However, adding additional sales, which do not require any added fixed costs such as rent, fixed salaries, utilities, etc., will increase profits by the gross profit margin. That's the revenue minus any direct costs of adding that revenue, such as sales commissions, cost to make and deliver the product or service, credit card fees, etc. The big takeaway here is this. When you follow the strategies in our program, the additional revenue you generate will count as gross profit, not net profit. But here's even better news. When you cut costs from your business, every cent goes straight to your bottom line. You keep 100% of all your cost savings. Unfortunately, many business owners don't think there are viable ways to cut costs. But studies have shown that a significant number of businesses operating today are nowhere near maximizing their cost-saving opportunities. There are several areas where costs can be cut: financing, suppliers, hours of operation, cash management, inventory, transportation, marketing, to name a few. Let's discuss several areas where you can experience immediate cost savings. Start with your suppliers. If you purchase any number of products or services on a weekly or monthly basis, contact your current suppliers and let them know you're forced to cut your business's expenses and you're in the process of auditing your current purchases. Tell them you prefer to continue a long-term relationship with them, but you need a 20% price reduction in exchange for a long-term commitment. And would they consider that type of arrangement? Most will. If not, contact alternate vendors and offer them the same commitment. Due to the highly competitive business environment these days, chances are excellent you'll be able to successfully renegotiate many, if not all, of your current vendor expenses. And depending on your business, don't overlook the expenses you incur for insurance, landscaping, janitorial, trash pickup, office supplies, maintenance and service repairs. All of these are negotiable, and none of your current vendors want or can afford to lose your business. Consider the fact that the worst they can say is no. And when was the last time you audited your personal expenses? For example, your home, car, and life insurance policies. Insurance providers operate in a highly competitive, cutthroat environment. You can easily see a savings here of 20% to 30% annually. Same thing with your internet, cable TV, and cell phone providers. Depending on the size of your business, this one tactic could save you hundreds, if not thousands of dollars every month. Next, audit your business as well as yourself. Gather up all of your receipts, bank and credit card statements, both personal and business related, and go through them line item by line item. What are you paying for that you no longer need or use? Do you pay dues or membership fees for the local chamber or other associations or groups, but no longer attend these events? Then cancel them. Keep your emotions out of your decision-making process when doing this. You may belong to a local gym you really like, but the reality is you haven't worked out now for a year or more. Time to cancel and save that $70 per month. How many streaming services do you pay for monthly? Do you really use them enough to warrant the fee? What about magazine subscriptions? And speaking of credit cards, when was the last time you audited the fees they're charging you every month? Are you paying 18% or more in interest? Chances are you probably are. Call the credit card company and ask for a lower rate, or check out alternate providers. Credit card services is a cutthroat area you can easily exploit. You can often obtain a credit card these days interest-free for 12 to 18 months. Take advantage of this immediately and save all that interest. Are you aware that most of your everyday mundane tasks can now be easily outsourced, such as IT, accounting, bookkeeping, marketing, and so on? Consider outsourcing to contractors in the Philippines. Contractors there are highly qualified and speak excellent English. They typically have a bachelor's degree, if not a master's degree, and will provide their services starting at a few $100s per month. If you're a small business owner doing all of these tasks yourself, chances are you experience frequent overwhelm and are severely overworked. This is your pathway to regaining your time and getting back your life. Now look at the loans you have outstanding. One client we worked with had 7 separate loans totaling around $40,000. Each of those 7 loan payments averaged around $500 per month, $3,500 total. We recommended the client take out a consolidation loan and wound up with a single payment of $450 per month, $3,050 monthly savings. Next, ask your accountant to look over the ways that you've structured your business. Most business owners set themselves up as a simple LLC, a limited liability corporation. Nothing wrong with that, except you may be losing thousands of dollars in possible tax savings. One of our clients offered professional services and was earning more than $200,000 per year. He structured his business as an S-Corp, and this allowed him to pay himself a salary of $30,000 per year, and the remaining $170,000 passed through his business as a dividend. He still has to pay federal income tax on the dividend, but not Social Security taxes. This saves him around $18,000 annually, year after year. Check with your accountant to see if this might work for your business. If you have employees, ask them for their recommendations for cost savings. I guarantee you they have several they can offer for consideration. Perhaps offer them a percentage of the annual savings to spur their participation in innovation. All of these tactics add up to substantial savings for your business. Let's say your business brings in $1 million in annual revenue and has a 20% net profit margin. That means your total expenses equal $800,000. If you cut costs in just one area by $10,000, you've just saved 1.25% on your expenses. You get that by dividing the potential savings by the total expenses. However, that $10,000 represents an additional 5% of profit when compared to the current net profit of $200,000. And this is in addition to the increase in the value of your business, which easily doubles the impact. To make cost-cutting work in your business, your employees may have to be sold on the idea. That's because cost-cutting normally impacts your employees first. Take these steps to gain their cooperation from the start. Explain to your staff that you will need to make some cuts to maintain profitability. Outline the costs to be cut. Outline the reason why. As appropriate, offer a reward or incentive to staff who fulfill their duties to help cut costs. Follow these steps and you'll increase your profits immediately. As you go through the QuickStart program, I want you to consider the exponential growth you can experience by implementing several of these tactical steps simultaneously. Consider the following. Suppose you use bundling that we reference in the increased pricing module and experience just a 5% increase in annual revenue. Or better yet, if you don't sell a basic commodity, just raise your prices by 5%. Or set up 1 or 2 joint ventures using our joint venture module. Or improve your marketing using our marketing and advertising secrets module. Additional options here include upselling and cross-selling, downselling, internet marketing, and reactivating former customers. Next, lower your cost of goods sold by 5% by auditing your current supplier pricing and renegotiating a small reduction in your costs. You could also ask your employees for their cost-saving suggestions that would also produce this 5% savings. Although a minimum reduction of 10% is easily achieved in most cases, let's leave that figure at 5% so we stay conservative in our estimates. Finally, cut your overhead by 5% by employing just one or two of the multitude of tactics we just mentioned for cost cutting. As you can see in this example featuring a business making $1 million in annual revenue, just a 5% improvement in only these three areas would increase profits by 35%. Any business can easily do this with a minimal amount of time and effort. So get started today and enjoy an immediate increase in profits. Here's to your success.